In this chapter, we're going to be discussing job order costing. What is job order costing? Job order costing is a cost accumulation system where you track all of your production costs of your typical business model, but you do so job by job, which means this system is used only by companies who their jobs or their products are very distinct from one another. This could be making specialized machinery, custom fit to your customer. Same thing with customized furniture. If you're making textbooks, some textbooks are mass produced and sold to tons and tons of colleges, while some textbooks are made specifically for a university. If you're making that batch of textbooks, which is specific to one learning institution, they would use job order costing. And the big one on this is advertisements. It's not like advertising agencies make an advertisement and say anybody that wants to use it can. They make them specialized for each customer that they have. So because all of these business functions are very distinct from one another, it's very easy to know what some of your costs are going towards. And that would be your direct materials or your direct labor. When an advertising executive is looking to make an advertisement for a customer and they accumulate costs for their labor, you know they're working on that specific job. When materials are used, say, to make custom furniture, when a piece of wood is taken out of storage, you know specifically if they're building a customized table for somebody or they're building a desk for someone's office. Like, you know specifically what purpose that input is being used for. So for job order costing, what you need to do is you need to set up a record where you track the amount of costs that go into each and every individual job. And the two things that you could always trace very easily are materials and labor. Some costs of production, however, are going to be shared amongst multiple different jobs. If you're making custom furniture, wood glue, no one wants to measure how many ounces of wood glue a job takes. If you're an advertiser, no one wants to measure how much paper, how many sheets of paper you use to make proof concepts of your print advertisement that you're going to sell. All of those things are very indirect. And labor can be indirect too. You can have a supervisor. We'll go back to our custom furniture place. You can have a supervisor who's overseeing all of the carpenters. Well, some of his time is attributed to monitoring someone who's doing one job, while some of his time is attributed to someone else who's doing another job. Those costs are shared amongst multiple individual jobs, which means you can't assign costs very easily between the different jobs. So what do you do in that instance? You make a pool, and that is a collection, an accumulation of all of these indirect costs that you're going to incur. So all of the costs that are shared by multiple jobs at once are put into a pool, and then later on you're going to figure out how to take the money out of the pool and spread it out in some fair way amongst all the jobs that you did. It is plausible that companies will have multiple different pools based upon how those costs are accumulated or what they're related to. But the process is the same for all pools. So I think it's best in this particular course if we just have one pool, and we're going to call that pool of all of these indirect costs our manufacturing overhead pool. All of those costs of indirect components of production are going to go into that pool, and then at some point we are going to take the costs out of the pool and we're going to systematically spread it out amongst all the different jobs. And the way we do that is we identify what component of our production model is causing us to incur the majority of these indirect costs. And we're going to declare that to be what they call the cost driver. It's the thing that is driving up the cost of all of these indirect costs that we have. We figure out how much of that driver was required for each and every pool. So if you think labor is the reason that you're causing all of those indirect costs, you have all the money in the pool, you spread it out to the jobs based upon how much direct labor those jobs took. And there's tons of different drivers that you can have, and there's no right or wrong driver. It's the one that most accurately reflects how production happens for your company. We have the actual indirect rate. This would be assigning costs out of that pool, knowing what the actual indirect costs you had for the period were. So if ABC Company accumulated $500,000 worth of indirect costs into its manufacturing overhead pool, they would need to find some logical way to take those costs out of the pool and put them into different jobs. And they've decided that since they're a very machine-intensive operating procedure, they have to go and they have to use machine hours as the thing that would cause them to incur the most indirect cost. So now they've declared machine hours as their driver, they would assign a fair amount of that $500,000 of indirect costs in their pool to each job based upon how many machine hours it took to do that job. Well, if they ran machines for 10,000 hours, at what rates are they going to spread out that $500,000 of indirect costs? And you just take your actual accumulated indirect costs, divide it by the actual quantity of the driver that was used across all jobs during the period, and you get your rate. In this case, if they're spreading out $500,000 across 10,000 hours of machine operation, they should be assigning costs out of that pool at a rate of $50 for every machine hour that job required. So if ABC Company, on one particular job 17, use machines for 800 hours, how much cost should they take out of the pool? Well, you just take the quantity of the driver used, in this case 800 machine hours, and you multiply it by that allocation rate. They've decided already that they're going to allocate out $50 for every hour of machines are operated on a job. This particular job took 800 hours. 800 times 50 is 40,000. So for this job, making a huge batch of custom furniture for somebody's office or for a showroom or something, they're going to allocate $40,000 of indirect cost to that job. Essentially saying, this job caused us to incur $40,000 in overtime costs, indirect materials, indirect labor, utilities, depreciation on our equipment, all those things that you don't trace. Like the total cost of that $40,000 of our overall cost, that $500,000, should go into job 17. There's a huge problem with this actual costing though. How many of those inputs that I just discussed are you going to know the actual amount you'll incur of during the year? Like utilities. If a job ends on January 7th, are you going to know to a T what your utility bill is going to be when it rolls around at the end of January? Overtime, idle time, sick leave, those all count towards indirect costs as well. How are you going to know how many hours of overtime your workers are going to work? How much people are going to call in sick? You won't. Same thing with maintenance repairs. You don't know when machines are going to break down. So the problem with actual costing in that case is by the time you know what your actual cost is, it's probably so far after the job has been done that your books are going to be missing a bunch of costs that should be in jobs at the time. So what do you do in that situation if it's pretty much impossible to know the actual cost of a job at the time it's finished? You make your best guess. You go through and instead of saying this is how much actual overhead costs we incurred, you look at what happened in the prior periods, and you'll know that normally you spend a certain amount on utilities, somewhere in the ballpark. Normally, production requires a certain amount of overtime based upon how many jobs that you have. Normally, people call in this many days sick during a period, and normally this is how often things break down. Based upon what your historical precedent of your company is, you'll know what your normal amount of all of these indirect expenses is going to be during a period. And when you know reasonably what the normal amount of these indirect costs is period to period to period, you can spread those costs out to jobs at the time that they're finished or when period ends based upon that normal amount, and they call that normal costing.